All right, all right. Oh, let me fix the camera. All right, all right. There we are. How's everyone doing? Let me know if everyone can see me, if everyone can hear me, if everything looks all right. I can't change much about my face, but I hope the rest looks all right as well. How is everyone doing? Hello, Jones, Potato Trader, Francesco, Sjoerd from Mount Everest. There's no way. There's no way. Currently from Camp 4 on Mount Everest. There's no way. That's crazy. Hello, Tuzar, Paul. Hello. Abid. How is everyone doing? Ik ook, Charlie. Ik ook. Welcome. Hello, Wasim, Akash, Jones, Vinod, JJ, KB. All right. From Brooklyn. Okay. Hello, Eves. How are you doing from Brooklyn? Love that. Nice, Wasim. Nice. All right. Hello. Hello, Antoine. Hello. Gigi, Gimo, Lil, Rizwan, Clarkson, Luke, Matt. All right. How are your videos are just a bomb. Love that. Thank you very much for your efforts. Thank you very much. I would be glad if you could give a forecast for next week for the US dollar JPY currency pair. Personally, I plan to open long. Interesting. We'll take a look at it. It's on the list. Could be interesting. Please come in. Hello, Rex Ahmed. How are you doing, sir? Damien. Oh, wow. Okay, Damien. Damien. Who is he, bro? Let's go. Okay. Hello, Walid. Umar. Jonathan. New York, Manhattan. I would love to visit New York one day. Would love to. Hello, Khaled. All right. There's a few things that we want to go over today, which are quite important. First of all, of course, number one, we have forecast. Number two, we have World of Fair Value Gaps. The video that was uploaded yesterday. Now, there's a few things that I want to go over regarding that as well. A few things that I wanted to highlight more, but also wanted to ask everyone here what you struggled with, what you found easy, and what you struggled with as well. So we can clarify those topics as well. That is very important, in my opinion. Now, of course, we'll start off with the forecast. And if you have any questions, then, of course, also feel free to let me know. Please make it quick, no longer than 1 hour, Ario. I'll try my best, Clarkson. I can't promise anything. If there's many good questions, then it might take 5 hours. Who knows? No, not 5 hours. Struggle of bias. Okay. Great video. Thank you. If there's anything you struggled with in the video, then, of course, feel free to let me know. This is the perfect time to also go over it, dive into it more in depth. Gold will be interesting to see this week, this development. Yes, very true. We'll dive into that also very in depth. You took any trades last week? Yes, I took one singular trade last week. Yes. Let's see. Breakaway, okay. How we can know that price will not retrace deep into the fair value area? Price should never create a deep retrace into a fair value area. If it does, then usually there's a sign of a consolidation. Let's see. I will show my trade. No worries. Let's first dive into the forecast. Afterwards, we'll dive into the videos, questions, and my trades as well that I took this week for my trade. Why don't I say anything about fair value area in the video? We can go over fair value area. It's just the video I specifically wanted to make it about fair value gaps alone. So if I were to also talk about fair value area, it might have been a little bit confusing and a bit overwhelming because the video itself is already quite a lot of information to take into account. So that's why. Let's see. Thank you, Ibrahim. Thank you. All right, let's dive into the forecast first of all. Again, drop all your questions. Feel free to. I'll try my best to go over as much as I can. If you have any questions regarding World of Fair Value Gaps or think about it already, and then we can also go over it as well. And first, we'll dive into the forecast right now. All right, let me see if everything works. All right, perfect. There it is. First of all, before we dive into the actual price action, let me dive into the right there. Let me dive into Forex Factory. After Forex Factory, I also want to go a little bit over data that I have gathered. That I have gathered right there. This is regarding volatility, what we can expect in December and these late months during this year as well. Quite interesting data, but we'll dive into that in a bit. All right, let's see. First of all, economic calendar. What do we have? On Monday, some Euro, orange folder news. All right. Now, the overall important thing for me is that we don't have any US dollar disturbances. And what I mean by that is that we don't have big three news events. So there's no NFP in the way. There is no CPI in the way for US dollar. And there's no FOMC. And that is very nice because that means that price might have a very smooth time continuing higher or continuing lower. So right here, overall, the week looks quite nice, looks quite active as well. Let's see, we have US dollar red folder news right there on Thursday and also for Friday right there. All right, so Monday, I'm going to personally take it easy. More so Tuesday and the rest of the week will be looking quite interesting as well. But Monday right there, going to take it a little bit easier. Now, right here, what you're seeing on your screen right now is the volatility on average per week in the December, November and January and February months. And this is for Euro US dollar on the past 6 years. Why is this important data to potentially have? Now, is it truly a secret or anything like that? Absolutely not. But it's quite interesting to take a look at it because when we move from November to December and we move from December to January again, in December, there's a drop off in volatility. Now, if we take the above graph right there, then we'll see week 44, week 45, week 46. Week 46 is just behind us. That's the week that we just had, which is usually above average volatility right there. Then we'll see once we start approaching week 50, week 51, week 52, week 53 right there, the end of December, that's when we really drop off heavily in volatility. Now, volatility is quite important to understand because volatility brings a trend in the market. As in, if there's no energy to move anywhere, which is volatility, then we'll most likely stay in a very similar spot. So we'll stay in the same place. Now, that's also a reason to potentially consolidate. So if there's a lot of volatility, we'll most likely also move higher or lower quite a lot. So more volatility tends to have a correlation with better price action as well. Now, right here, if we take a look, in January, it picks up quite fast again right there, the volatility heading into the new year. Now, this right here is a little bit more in depth where you'll see December right here on the right at the bottom is below average volatility for the months. And you'll see right there, it really drops off the volatility heading into December. This is very important to understand. So once you see drops in volatility combined with understanding as well that we might create consolidations, that is extremely important. That is things you want to be avoiding. So I'm just trying to already ingrain into your mind, hey, start paying attention to consolidation, start paying attention to low volatility price action, because that's exactly what you want to be avoiding in the near future as well when we arrive into December. All right, but first of all, next week could still be interesting because we're still in November for now. If we take a look at the dollar right here, what do we have? On the monthly, we have been continuing higher. And to me, at this moment in time, the drawn liquidity and the drawn liquidity has been quite clear for a while right now. This high that we have taken, of course, and afterwards, this next swing high right there. I believe once we take that swing high right there, we might be in for a little bit of a consolidation when it comes to the end of the year as well. So I think we want to end the year right there when taking that high right there on the monthly time frame. Now on the weekly, what do we see? We are currently in a third candle, meaning once this candle opens in a few hours right there, that's a third candle. That's important to understand because we might create a consolidation for that third candle to then continue higher the week afterwards. That doesn't mean that we will guaranteed be that it guaranteed will be a consolidation. Absolutely not. But we do want to pay attention to signs of potential consolidations. So right here on the daily, we have this daily fair value gap, which we can still continue higher from. And I believe this previous week high is a very realistic target throughout this week right there. And potentially even the monthly swing high right there. Now on the 4 hour and the 1 hour, I would like to see these fair value gaps right here start to create new fair value gaps, start to run this high right there. And what I mean by that is we want to see this high getting ran right there. Meaning that we create fair value gaps above that high to simply continue higher towards the next target as well right there. I think that will definitely and potentially we'll see some very nice price action right there as well. But what you want to watch out for is if we start to disrespect fair value gaps on both sides and neither side is holding, because then we are in for a weekly fair value gap right there next week. And then we could potentially continue higher from that. That is very important to pay attention to right there. But overall, the dollar right here, bullish. Very bullish in my opinion right there. At least until we reach this swing high. All right, let's take a look on the indices. So the indices actually had quite a huge drop off, which is quite interesting to see. Some of the indices reached an all-time high, which we already saw in the previous week as well. NASDAQ, ES, right there. Now we are failing to create this fair value gap. Now, like we mentioned as well in the world of fair value gaps, and again, I don't want you to, I need you to understand as well that price action, its objective is not to necessarily create fair value gaps. As in, price action is going to continue higher or continue lower. But due to price action going higher or lower, it is going to leave behind fair value gaps. So right here, if price wanted to continue higher, then the possibility of it creating a fair value gap was very high. Now it fails to create this fair value gap right here. So could we potentially, in the short term right there, see some lower prices right there? Now that's what we have to pay attention to, because that's a tricky situation. We have this fair value area right here. The most recent fair value area on the daily right there. Overall, the higher time frame has been very bullish. So how do you approach this? Do you immediately want to look for shorts or do you immediately want to look for longs? You want to do neither at this moment in time because it's 50-50. Why is it 50-50? Because we have been bullish for a very long time right there. And well, arguably we are still bullish on the higher time frame as well. Nothing has changed in that regard. But we have a lot of momentum currently, bearish momentum, going against our bullish higher time frame objective. So right here, when we have this bearish momentum going against us and we have this fair value area, we simply want to wait and see what we can do with this fair value area. So we will potentially create this daily bearish fair value gap right there. If we sting into that, we get a rejection from the fair value area. We sting into that, continue lower overall. Then what does that mean? That means we are not offering fair value anymore, and we are instead seeking liquidity in the form of this fair value area low right there. So we might want to continue lower. Now, if this doesn't happen and we create this fair value gap right there, this fair value gap might create some rejections, but it doesn't push price lower significantly. So we might see higher prices and we can still look to continue higher towards the all-time high. So that is reacting at that moment in time to whatever this fair value gap, the daily fair value gap right there, wants to do. But at that moment in time, at this right here moment in time, I would like to wait. I would like to wait to see what it wants to do, because to me, that is quite 50-50 on the higher time frame as well. That's very similar to something like NASDAQ, to Russell, to YM, because they all move in correlation as well. So that is very important to understand for the indices. Now, if we move on to the Forex majors, let's see what we have. Australian dollar, US dollar. And last week, it was very interesting because we mentioned in the forecast that Euro US dollar and US dollar CHF right there is the highest probability and is the ones you want to focus on for last week. Euro US dollar and US dollar CHF had the best opportunities as well. And we saw that coming on Sunday because we understand which ones we want to trade. Now, just because the dollar is high probability and we understand the dollar wants to continue higher, you still have 1, 2, 3, 4, 5, 6, 7 pairs that you can choose from right there. And those 7 pairs are not all as high probability as the other one. Euro US dollar might be higher probability than GU, for example. That's important to understand because you want to always pick the right pair, the highest probability pair to trade. So if you're looking for buys, you're simply looking at which one is stronger. And that can be very simply done. If you compare, for example, this line chart to this line chart right here. Let's say this is EU and this is GU. And which one is stronger? The one on the right, EU right there. So we'll also take a look at that right here on, again, the Forex majors. Now, on AU, what do we see? We see this weekly fair value gap getting respected right there. Afterwards, we continue lower right here. I think the next targets, we're looking at that long wick. I personally am not a big fan of very long wicks like this to just use it as a target. So I want to refine my target a little bit more within that wick. So on the 4-hour, we have this low right there with those bodies. I like to use that as my target. Now right here, if we take a look at the daily, we have this daily fair value gap. But at this moment in time, I would not necessarily expect a retracement into that daily fair value gap just yet. We could, and if we do, I would still be bearish right there with the fair value area overlapping as well. From the 4-hour right here, at the beginning of the week, I would like to see if we can already deliver into this low right there and then look at the new fair value gaps being created if we can continue lower from that as well towards these lows. But to me, Australian dollar, US dollar is all right. But it's not the highest probability major that we see right here. So if we take a look at EU, then what do we have? On the monthly, again, looking good, looking very bearish right there. We have this swing low that we can currently look to target as well. On the weekly, what do we have? We have a perfect candle signs respect right there, which we'll dive into actually next week, candle signs video. Very interesting. And I can finally, I can also then afterwards discuss it on live streams because there's certain concepts that we have not mentioned before on YouTube as well. But we'll get into that. Now, right here, what we're seeing is we're seeing price aggressively moving lower towards this low right there as well. Again, we're trading a third candle right there. Keep that in mind. Now, right here on the daily, what do we see? We have this daily fair value gap right there that we are currently respecting. So the first target, the previous week low, and the exact same, essentially just inversed on the dollar. We want to see if we can run that previous week low right there to then target lower. If we sweep it, it's very important. So if it's something like this, where we have a situation like this, and then we stall and we consolidate right here, it's going to wait for a third candle, weekly fair value gap to then continue lower the week afterwards. Okay, let's see. On the 1 hour, what do we have? We have this 1 hour fair value gap. Now, this might seem, and this is where we get quite advanced, and it's quite interesting for people that do like it. Now, right here, this might seem like an overall quite a good trend right here to potentially continue lower. The only thing you want to pay attention to right here is that the retracements at this moment in time are quite deep. So this is something that we call almost a consolidating trend in the MMT. And the reason for that is because, yes, it still continues lower, but the way it delivers lower and the overall delivery towards lower prices is not the nicest right there. Something you want to take into account. We have a very tiny fair value gap right here. Overall, at the beginning of the week, I would simply want to wait for new confirmation, new 1 hour value gaps to continue lower to target this previous week low right there. That could definitely be quite interesting. I do like that. But wait right there. Wait for the momentum to shift bearish again. All right, let's see. So EU, I would say at this moment in time, I like it a bit more than Australian dollar, US dollar. Okay, GBP, US dollar, what do we have? So GBP, US dollar right here has reached this low, reached these lows as well. What can it go for next? All right, and again, what I'm doing right there, that's not rocket science, right? I'm just marking out the next discount rate, essentially, that I can reach for. Let's do the same on the daily right here. What do we have? All right. Essentially the same low right here as well. Let's see. On the 4 hour. We have a few 4-hour value gaps that we can potentially continue lower from right there. But I prefer, again, still EU. And the reason why I prefer EU is because GU right here doesn't have a very clear higher time frame narrative. So the bias is bearish, yes. But then when both EU and GU are bearish, we need to go into the details. So which one has a better narrative? For example, an EU to me right there has a better narrative. And that is the daily value gap that it stings into to then continue lower. GU right there, not that clear. The 4-hour, I'm not the biggest fan of to dive into the 4-hour immediately right there. I prefer having a daily, weekly, or monthly narrative before diving into the 4-hour. So the 4-hour right here, I would first want to wait until we see a 4-hour value gap getting respected to then potentially continue lower. So still, to me, EU right there, the most interesting. New Zealand dollar, US dollar, overall bearish as well. Again, we reach a few major lows right there. Yeah, I still stand by the fact that I like EU a lot more right there. And New Zealand dollar, US dollar, very similar to Australian dollar, US dollar, not necessarily that interesting in my opinion. Now, US dollar, Canadian dollar right here. Unless we start trading back into daily value gaps, we can also look at some longs overall throughout this week, which could be very interesting. Again, keep in mind, we're in a third candle. So, also very important, what we touched on in the world of fair value gaps and what we're going to dive deeper into as well in the candle science video next Saturday is that there is a reason when we trade back into a fair value gap. So usually what tends to be is a previous candle high, previous candle low. We tend to sweep that to then wait for the fair value gap to be created to then continue higher from it right there. That's very important. So monitor this previous week high right there. Very important to understand as well. All right. US dollar CHF. Let's see what we have. So US dollar CHF had some interesting price action throughout the week, last week. Let's remove some things. It's a bit of a mess. Okay, so we have this fair value area that we have a sting into right there, which we're currently rejecting from. On the daily, what do we have? All right. So let's see if we can trade back into this daily fair value gap right there to then potentially continue higher from it as well. But again, keep in mind, this is rejecting from a fair value area to then potentially create a fair value gap right here. This is something you have to pay attention to throughout this week. Because if this is going to create a third candle and a consolidation, then everything on the lower time frame is going to be an absolute mess and people are going to blow their accounts and lose a lot of profits. And that is not what we want. So pay attention to that as well. Very important. All right, US dollar JPY. We had a question about US dollar JPY and someone mentioned that they were looking at potential long positions. So let's see what we have. On the monthly, also in the third candle, by the way. Now, right here on the weekly, what do we have? The weekly is yes, of course, you could argue in a third candle right there, but it's already rejecting from a previous weekly fair value gap right there as well, which is currently respecting. On the daily, it's a very similar scenario to what we saw earlier on the indices. We have this fair value area on the daily right there. We have a fair value gap overlapping. This is the overlapping defense right there that we can potentially continue higher from right there. But at the same moment in time, we have a lot of momentum going against us right there. So I want to see if this expansion phase candle right there can be turned into a fair value gap. If not, perfect. We look at longs. If we disrespect this, perfect. We still look at longs. Because I would also still want to look at longs right here. But I don't want to trade against this heavy momentum going against our trade ID at this moment in time. So that's what I want to be careful with. So I first want to see some bullish momentum, regain the market right there to then potentially continue higher as well. That's very important right here. But overall, I agree. Also looking at longs right there. Very, very, very interesting potentially. All right, gold and silver. This is where it gets interesting. It's because if it wants to load as well, my internet is dropping, I see. Let me know if I might be lagging out a little bit. Let's see. It's taking a while. Let me see. Hi, you still remember Dave? Yes, I do, my friend, of course. Of course, how can I forget about Dave? Of course. I do. All right, there we have it. Gold. So this is a very similar scenario. Again, like US dollar JPY and like the indices as well. Because we have a monthly fair value gap right there, which we could argue might have been a breakaway gap. Now, a breakaway gap is really a breakaway gap if there's still clear drawn liquidity. So you can't really call it a breakaway gap if there is no clear drawn liquidity and it's at an all-time high right there. That's important to understand. So right here, we trade back into that fair value gap right there on the monthly. But what do we see on the weekly? What do we see on the daily? Like we mentioned last week as well, we have lots and lots of momentum going against this monthly fair value gap right here on the lower time frame, also creating bearish fair value gaps. So this is where you simply want to wait. This is very 50-50. So right here, this fair value gap is going to be extremely important because this fair value gap, if it pushes lower right there, perfect. The monthly fair value gap right there, not interesting anymore. We want to look at bearish price action. But if this gets disrespected, we might still have rejection. So then creating daily fair value gaps again, bullish, then we want to look at higher prices right here. So in a moment like this, you always want to wait. And the reason why you want to wait is because when you have a higher time objective, that always has been bullish. There's no reason to be bearish on gold right here. It always has been bullish, has been very bullish even. Then you don't want to call a top in the market. But when you do have a bullish objective and there's a lot of momentum against your trade, then you first want to wait for that momentum to be in line with your trade ID again. That's very important. Otherwise, it's very a 50-50 price action. So that's very similar on gold, right? On silver as well, right here, similar to gold, where it's simply 50-50, where you would just want to wait. And whenever in doubt, I like to say this, whenever in doubt, wait for a fair value gap. I just had to laugh because I saw a question, sir, can you speak in Hindi, please? I don't speak Hindi. I can try my best, but I'm sorry, I don't speak Hindi. Anyway, we move on. Let's see, silver right here. Silver, very similar to gold. So whenever in doubt, just wait for a new fair value gap. I would like to wait for daily fair value gap higher or daily fair value gap lower right there. So what we see is this daily fair value gap follow through towards the context low right here. Then it sweeps the context low right there to potentially continue higher, creating somewhat of a consolidation. You want to wait right there. 50-50 price action. Now, something that hasn't been 50-50 is Bitcoin. Bitcoin has absolutely skyrocketed so far. See, how far is 100K? 10K. It was at 93K. All right. All right. All right. So for new positions, and this is non-financial advice, again, strictly not financial advice, but for new positions, I never like to add new positions at all-time highs because you don't have a clear drawn liquidity anymore. I always want somewhat of a higher time frame retracement, so back into a daily fair value gap, a weekly or monthly fair value gap, to then potentially look for higher prices again. So here I would simply like to wait as well on Bitcoin. Crude oil has been consolidating a long time, and we have talked about it in the previous forecast as well. But what do we see? We have this daily fair value gap right here, which we have a sting into, which we are respecting to create a new daily fair value gap right there. Perfect. So once we create that new daily fair value gap, and we also see right here a 4-hour fair value gap already, very nice price action right there actually. Can we continue lower from that right there to continue lower and look at lower targets right here? Looking at these lows right there as well. That does look interesting. So finally, potentially some interesting price action on crude oil to continue lower. Definitely nice. Bank Nifty. All right. Bank Nifty, there it is. Finally, as well, those lower prices right here. Let's see. So we were looking at targeting this fair value area, low right there. Now we have this daily fair value gap right here, which we can potentially continue lower from. But at this moment in time, it wouldn't surprise me right here if we already, first of all, see lower prices right there to then potentially trade back into it. But overall, lower price here on Bank Nifty does look very, very interesting in my opinion. All right. Let's see. Let's see. Let's see. What do we have? Hello from Greece. Love to see it, my friend. Love to see it. Let's see. There it is. There it is. All right. If you want me to go over any other pairs, then of course, feel free to also let me know. Did you take anything last week? Yes. Your trade. Yes, yes, yes. Thank you for the reminder. Thank you, thank you. Let me see. The trade was on CHF JPY. This is actually something that we're also going to touch on in the candle signs video, which is very interesting. Now, right here, if we take a look at the monthly overall, I'll break it down again. We broke it down last week as well, but I'll break it down again. This has been on my watch list for a very long time, right here. On the monthly right there, we had to stay into that. On the weekly, you'll see it more clearly. We tried to push lower, failed to do so. Then we created a bullish weekly fair value gap right here to continue higher from. First candle does not reject. Second candle, previous candle low sweep right there to then continue higher. Why that is will make a lot more sense once you have watched the candle signs video next week as well. Then here on the weekly, we have this weekly fair value gap right there. From that weekly value gap, we can potentially continue higher. Same premise as the previous fair value gap right there. First candle does not reject. Second candle, sweep the previous candle low to then continue higher. So here on the daily, what do we see? You'll see right there a little bit more clearly right there. On the 4 hour, we had this 4 hour fair value gap right here, which we can continue higher from. Fair value right there. Fair value area right there, which we can also continue higher from. On the 1 hour, we were expanding higher right there as well. My entry was sitting right there and it was a 1, 2, 2 right there. Now this entry was a break-even trade for me. So after this, you'll see it right here. Oh, not indicators right there. One candle further back right there. So what should happen here? And this is thinking ahead as well. And this is very important once you start to get more into break even, etc. Now, right here, this expansion phase candle should do what? It should create a fair value gap. So when you want to go break even, you should always ask yourself, what should price do to stay high probability? It should create this fair value gap right here. That automatically then also creates this fair value area right there. So if we are going to continue higher, then we might retrace back into the fair value area, fair value gap, to then continue higher from right there. So will we see a deep retracement back into my entry to then continue higher? Most likely not, unless we are also not only going to aim for my entry, but also for my stop loss right there. So that to me is a break even right there already quite fast. So for me, it was a break even week, actually. If that makes sense. Let's see. Oh, Reiki, opinion on $10 CHF, unusual as always. Let's see. Reiki is the unusual context, the master in the MMT. Let's see what we have. So Reiki is probably looking at the failure of this monthly value gap being created, but let's see if that is the case as well. We do have a weekly value gap right there, also a weekly value gap failing right there. So it's both sides failing. I don't necessarily like that a lot. Let's see. Daily value gap had a sting into. This to me is not that clear, to be honest. Higher time frame, if we do create a bearish daily value gap, I would prefer to look at some bearish price action overall. But to me, this is a big consolidation right there. Don't like it a lot. Why didn't you trade the euro? To me, I could have, and we mentioned it as well. But to me, what is it? CHF was higher. High probability. One trade. Was one trade. For sure, Jin. For sure. Let's see. I haven't understood that disrespect candle that later on reverses from the fair value gap. I always think it will continue the direction whether higher or lower, but instead it reverses from the fair value gap. We'll dive into that, and I'm sorry to say it like that, but if I dive into the specific concept, then the unfortunate reality is that people will create that video before me, and they will then blame me because I do that. So we will dive actually in that specific topic, Gloria, next week in the candle signs video. Why that is and what you can expect, etc. Hello, Papa. Hello, hello, hello. How are you, sir? I'm doing good, Rainison. Love to see it. How are you, sir? What stocks look interesting right now? So I have a few stocks, and this is not financial advice again. So this is purely for demo purposes. Don't copy me, please. I have a few stocks on my watch list, and that is the following. So in the MMT, if you didn't know, we also trade stocks. Well, actually, we invest in stocks. All demo investing. Don't sue me. Now, and we have done really well, to be honest. Like, I don't want to brag or anything, but 2024 was a really good year for stocks. So Shopify, for example, we have mentioned right there. Shopify is still interesting to continue higher as well. Then also Bank of America right there is also still looking very interesting. Tesla as well, still looking very strong, looking very interesting. Starbucks right here, also still looking very good, very interesting to continue higher. Roblox as well, still looking very good. We have a monthly value right here on Roblox, which we could trade back into. Let's see what we can do from there. Coinbase also very interesting. And some previous ones that we had, for example, one that was absolutely, that made my year, honestly, was Palantir right there. We mentioned Palantir right here very early on in the beginning of 2024 right there. Skyrocketing towards all-time highs. Absolutely beautiful. And for anyone that doesn't know, I got started with trading actually through stocks as well. So stocks is always a little bit of my, my I don't know how you call that. It's my first love, you can put it like that. I absolutely love stocks. I like analyzing them a lot. Not necessarily day trading, but more so investing. Let's see. Let's see. Let's see. All right. Yes, I will, Hassan. I will do that. Yep. At the end of 2024, beginning of 2025. Yeah, for sure. Which broker? I mainly use IC Markets and interactive brokers. So in the trading panel right here, again, do your own research, but I mainly use IC Markets and interactive brokers right there. But do your own research, I would say. That's very important. I'm not married. No. All right. If you do have any questions regarding World of Fair Value Gaps as well, then feel free to let me know. We can dive into that if you want to. Or you say everything was so clear in that video, which I'm not sure if that's the case. But then yeah. What happens when you have two conflicting fair value gaps on the same time frame? More confirmation, because that's 50-50 signs. So again, if you're expecting bullish prices and you get a bearish fair value gap against you, that's not good. That's just a simple sign that we might want to consolidate. Not that interesting. Do you require news for swings? For entries? No, not necessarily. No. Let's see. What if we have two fair value gaps in the context area? How you find from which fair value gap the price will continue off of? The first fair value gap always, depending on the scenario. So let me show you an example. So if there's two fair value gaps that we can continue higher from, you want to approach it the following. Let's see which one is a nice example to use. Let's see. Well, arguably maybe Euro USD on the lower time frame right here. So you always want to look at the first fair value gap. It's either the first fair value gap, because that is the first line of defense, or it is the overlapping defense right there that we can continue lower from. That is what you want to look at. If we have a scenario, let's see if I can find an example right here. For example here, if we have a scenario right here that we don't respect this fair value gap, that daily fair value gap right there, but we also have a fair value gap right above it right there, then we want to trade from the first fair value gap right there. If we do not respect that, then we have disrespected first fair value gap. That means that when we trade back into the second, unless it's overlapping with an overlapping defense, like a fair value area right there, then we can still continue lower from it. Otherwise, it's just a sign that we actually don't want to continue lower right there, if that makes sense. I'm not a good singer. I'm not a good singer. Types of fair value gaps and why they typically form. That's a good question. We have mainly 3 types of fair value gaps, and we have, well, you could argue potentially 4, but let's keep that 3 right here. We have a consolidation fair value gap, so that's where the third candle is a perfect consolidation. We have a breakaway gap, where the third candle is a huge expansion phase candle, where we don't want to trade back into it. And we also have a rejection fair value gap. That's where the third candle is a huge rejection, where there's a lot of momentum going against us. And why they form, and why those different fair value gaps form, is because of resistance that we have towards the left. So for example, what you'll see is this might first initially be a breakaway gap right there. But if you combine it with the understanding why fair value gaps get formed and why they get traded back into, is because we reach this swing low right there. So when we reach that swing low, there's now a reason to trade back into that fair value gap. So is it then actually a breakaway gap? No, it's not. So right there, that's important to understand. And sometimes you'll see, let's see if we can find something on the lower time frame. Sometimes you'll see the rejection is very large on the lower time frame from those resistance areas. And when that happens, that's something you want to avoid because there's a lot of momentum going against you as well. So it's all about resistance and then also combining with news, for example. Watching from Uganda, love to see it, my friend. Love to see it. Best case study to be good at fair value gap. I always recommend after you watch any video, could be World of Fair Value Gaps as well. Afterwards, take those concepts, do a case study, see it for yourself. And when you start seeing it for yourself, it will make a lot more sense. Main difference between a Judas swing and a turtle soup. A Judas swing doesn't necessarily have to be a turtle soup. If that makes sense. Let's see. Hi, I'm following your filtering method and I stop analyzing contacts daily. I barely have 2 to 3 A setups a month. Is that normal? Yes, that is normal. Yes. Yes, correct. Ideally, you want to find one good setup a week. You can use the 4-hour, Yasir, but you want to go into the lower time frame and see if there's a very clear target. So for example, your US dollar right there, last week, this 4-hour fair value gap, that's perfectly fine because this drawn liquidity is very close right there, if that makes sense. Let's see. I've completed the A to Z playlist, Market Mastery and MMC, and I've also done extensive backtesting. What should I study next? Well, that depends. That depends. First of all, I wouldn't do backtesting, replay backtesting. I wouldn't advise that. I would take those concepts and apply it in a live environment, as much live as you can. That's very important. So it really depends. Where are you at? As in, are you just watching videos for the sake of videos, or are you actually applying it? And are you understanding it? Because if you're understanding it and you're applying it, then there might be no reason to watch anything anymore, if that makes sense. So it really depends on your scenario. Love that 009. Love that, love that. On the wicks of fair value gaps, wicks are very important. Wicks are very important, but it depends as well. I'm not sure in which context you mean. Oh, I have an indicator in the top left. This is an MMT indicator right there. It helps people with understanding the probabilities of a certain pair. So for example, right here, it says euro US dollar is 83.2% bearish. So next week it's more likely to continue lower right there. It's a mid probability to trade it. That's why that's an indicator to help shorten the learning curve of people that come into the MMT and help them understand what it means for something to be high probability and low probability. I don't recommend backtesting. Well, backtesting, again, I recommend going hindsight backtesting. So a lot of what I do in the videos as well, for example, is I go into certain old fair value gaps and see and understand price action and what happened. Because to get your eyes familiar with what is actually happening at that moment in time. Now, replay backtesting is not beneficial, in my opinion. You're here to become a trader, I imagine, another replay trader. So live trading is the complete opposite almost of replay backtesting. And what I mean by that is in replay backtesting, you're most likely going to build such bad habits. So from my experience, if I took a loss in replay backtesting right there, then right here, I might skip a few candles. Okay, now I can take a winner right there. Whilst those few candles, they are all individual days. So you never get exposed to actually being patient, for example, or actually looking at that moment what is happening in the market. Where replay backtesting, people just click a button right there, fast, 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 fast. You need to be patient. You need to see what's happening in the market. You need to take into account correlations, etc. Replay backtesting at this moment in time can't reflect that. It can't do that. So it's a lot of building bad habits. And again, a short time of replay backtesting, I wouldn't necessarily say it's bad. You can get familiar with your trading plan. But getting stuck in it, and what I've seen from a lot of people is they get stuck in it. So for example, some replay backtesting tools, they have those data statistics. Those statistics are nowhere near to what you are going to get in live trading. And what I mean by that, some people just keep on backtesting until they have an 80% win rate in backtesting and they have a 100% return in backtesting. Then they move on to live trading and their win rate all of a sudden drops to 40%. Because backtesting and live trading is not the same. It's completely different. So you might as well, in my opinion, dive into the water, and because you're going to learn to swim sooner or later, dive into the water. It's the best way to gain experience. And then just accept the fact that in the beginning you're going to lose. So don't risk a lot in the beginning. And then learn from that experience instead. If that makes sense. That's my opinion on it. That's what I've seen works best for most people. Say something about rejected fair value gap. So rejected fair value gap and a rejection fair value gap is forward testing. Yeah, exactly. That's a good thing, in my opinion. Anyway, I was going to say I was a bit distracted by a message, but right there, a rejection fair value gap, what I think is very important to understand in a rejection fair value gap is simply from a momentum perspective. So what I mean by that, what we have gone over on, for example, NASDAQ right here and on ES, that there's a lot of momentum going against our bullish objective currently. That's what we want to avoid. So it makes it 50-50, for example. Now, it's important to understand when we take a look at fair value gaps, initially when a fair value gap is getting created, we have either bullish or bearish fair value gap. So it creates certain momentum. If we have a bullish fair value gap, it creates bullish momentum. Then when the rejection fair value gap, so the third candle is a large rejection going against us, what happens is there's a lot of momentum against our initial fair value gap. So we don't want to trade against that momentum. That's very important. And let me see if I can find a clear example of this as well. Let's see. It's essentially what you want to look at is the potential of the fair value gap and then the actual fair value gap that was created in the first place. That's what you want to pay attention to. Now let's see. I want to find a good example of this. Well, we could argue, actually, when I think of it, CHFJPY right here, at this moment in time, could be quite a good example. So right here, this fair value gap has not formed just yet. But what we're doing right here is that we have this potential fair value gap right here. Now let's say 300 right there. Then the next candle is quite a large rejection going against us. So quite a lot of momentum going against us right there. where the potential fair value gap is now only 78. So I'm not sure what the exact percentage is right there, but that's from the potential fair value gap to the actual realized fair value gap. That's a lot smaller. So there's a lot of momentum going against us in a third candle. Now, that doesn't mean we can't continue higher. That just means the price at first will create a deeper retracement. We'll need some more confirmation to regain that momentum in our favor again, to then look for a trade ID. So you don't want to immediately enter right there. It's different than a consolidation fair value gap because of the strength perspective. If that makes sense. I don't use rejection blocks. I don't use them. There's an A to Z guide video on it, but I personally don't use them. Both, I would say, stack. So should you use intermediate term highs or intermediate term or short term highs? I would argue both. Really depends. Really depends on the scenario as well. First time in live forecast. Welcome, Emmanuel. Welcome, 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 my friend. Welcome. Let's see. We will. I will, Jojo. I will. I will explain token rejection in the next video, actually. In the next video. How to predict fake fair value gaps. A fake fair value gaps is oftentimes a higher time frame conviction. And what I mean by that, I actually made a newsletter around this because I think it's quite an important topic. When you have a higher time frame objective, so right here on NASDAQ, we have always been bullish. We have always been continuing higher. So when in recent times right here, we start to again continue higher, align with that higher time objective, we start to continue higher towards that all-time high right there. When we then create a bearish fair value gap right there, that is based essentially on nothing, on thin air, you could argue, then that right there is most likely a fake fair value gap. Meaning, and of course it's a fair value gap in itself, but meaning that fair value gap is most likely not going to hold because of the higher time frame. It's not aligned with the higher time frame right there. It's not coming from anything significant, if that makes sense. That's very important. All comes down to higher time frame conviction. Let's see. A snappy entry. I'm not sure what that is, my friend. Thank you, Ashes. I don't think I'm the best trader ever, but maybe I'm good at explaining things. Let's see. I won't, Buddha, unfortunately. I don't use any other concepts that are not from the MMT. Let's see. There's not necessarily one better. Filtering process versus flow. It really depends on your personality, depends on your time zone. There's not one better than the other. A lot of people think, and to give you an explanation as well, filtering process is essentially what we just did. So going over quite a lot of pairs, etc., seeing which one is the highest probability, we want to trade that one. Flow is sticking to one instrument. Now, there's not one better than the other. Because people a lot of times think flow, when you focus on one instrument, you can go into the lower time frame, the 50 minute, the 5 minute, the 1 minute, that will provide more opportunities, that will provide more money, essentially. That's not true. That's just simply not true. So there's not necessarily one better than the other. It really depends, and I would see it from a perspective of what is your personal preference, but what is also your current lifestyle, your time zone. Very important to understand, because people on the American side of the world, where I currently am, it's a little bit harder, more difficult to trade a filtering process trading plan. And flow, usually Americans like flow also a lot more because it suits their time zone better. Let me see. Yeah. No, I'm not awakened, no. I think the market maker model trader, I think he's also Dutch, but I'm not sure. I'm not sure. It might be the heavy Dutch accent on both of us. A sneaky breakaway gap, yes. Sneaky breakaway gap is essentially, well, like the name says itself already, it's a sneaky breakaway gap. So let's say you have a very clear drawn liquidity, for example, like that. You have a fair value gap like that. You have the third candle, which forms, let's say, something similar like this. It might even be an up candle. So you think it might trade back into the fair value gap to then continue lower. Now, it depends on the wick right there. Because if the wick is long, something like this, and the wick is already a rejection right there, then it's more likely that we're already going to continue lower right there, if that makes sense. Instead of trading fully back to the fair value gap to then continue lower. That's usually when we are respecting something on the lower time frame to then already continue lower, if that makes sense. It depends on the drawn liquidity timer, what a breakaway gap is. It really depends. I'll try my best, Ivor. I'll try my best. I'll try my best. Ajax or Feyenoord. I'm more of a PSV fan, to be honest. In Europe, I support all the Dutch teams. In the Netherlands, more PSV, to be honest. I'm sorry. Sorry. But I'm not really a supporter of specific Dutch teams. If we are in a weekly third candle, if a potential for value gap, and we have daily context, do we go for the trade? So let me show you an example of this. This is what in the MMT. I'm not sure how we exactly call it, but there's a theory around this that we well, you could argue, discovered when that happens. So on CHFJPY, we have a perfect example of this. And let me show you, because this happens quite often. It happens on any time frame. I'm currently showing you the weekly and the daily right here, but it happens on any time frame. Right here, we have a weekly fair value gap in the making. So we are in the third candle right there. We have this weekly fair value gap that could be created that we could trade back into. Now, the reason that we can trade back into a fair value gap is oftentimes also previous candle high, previous candle low. On the daily, what you'll see is that we have this fair value gap that we might want to continue higher from daily context. So what do we do in this case? Well, what happens oftentimes is that this fair value gap still follows through right there towards the high, then sweeps the high to then trade back into the weekly value gap to then potentially continue higher, if that makes sense. So right here, you'll see something like that. We sweep the high to then trade back into the weekly fair value gap next week right there. So can you still trade it, to answer your question? Yes, but just know, once we reach that high, the context high, you want to be very careful and at least break even. No worries, Temple. No worries. Welcome, welcome, welcome. I'd love to hear it. You have made yourself a profitable trader, my friend. Not me. Not me. All credits to you. yeah, everything in trading is relative. Everything in trading, I would say, is a bit nuanced. You could argue. Yeah, I like that. All right, perfect. Sir, I have a lot of time throughout the day, but I don't know how to start flow trading. Please, can you explain? Well, it really depends, because let's say you have 8 hours throughout the day that you can focus on trading. That doesn't mean you want to use all of those 8 hours on actual trading. So you want to pick a time window. And what I mean by that is, let's say for you, you're only going to focus on trading from 1 p.m. to 3 p.m. That's where your trading is going to be. For the rest, you're not going to be trading right there. And that's, again, time management is very important when it comes to trading. Like, more time or having more time to trade is actually not always beneficial, because people are going to stare at their chart, and staring at a chart when nothing happens and when there's no high probability conditions or good trades to show itself is just going to be detrimental to you. So you're going to force IDs, etc. So pick a time window, first of all, that you want to actually trade. So for futures, that could be, I always want to be there at equities open, 9:30 a.m. New York local time. Yeah, it really depends, Duncan. How long will it take me to become a profitable trader? Some people join MMT, do it within a month. Some people take a year. It really depends. It depends on how fast you learn from your mistakes. It depends on a lot of criteria. So there's not a specific, let's say, within 1 year, you should absolutely be profitable. No, it might take you 3 years, it might take you 4 years. Who knows? It's more so about, do you want it? And what I mean by that, do you actually want to be a trader? Like, are you willing to be a trader for the long term? Because then the time shouldn't really matter. It's the same as choosing a university or a bachelor, a degree that you want to follow, an academy, whatever it may be. If you want to become a doctor, then if it takes 4 years, okay, so be it. But you want to become a doctor. That's why you're going to do it. That's why you're sticking to it. Time doesn't really worry you, because you want to be a doctor, if that makes sense. I think a lot of people, the wrong mindset is, I need to do this within a year or 6 months. Yeah. It's always, when you put a specific time limit on something, then I think it's usually there to disappoint you. Love that, Steven. Love that. All right. I'm going to end it here, team. Thank you, everyone, for being here. Thank you, everyone, for being here on this beautiful Sunday as well, taking your time. For some people, already Monday, I imagine, actually. Again, remember what we talked about. Next week, Saturday, we're back. We're back with the videos. So every Saturday, we're back. And every Sunday as well, of course. So for the Saturday, it's 8:30 a.m. New York local time. And for the Sunday, the live sessions is 1 p.m. New York local time. Now, the live sessions can vary a little bit, but if that's the case, I'll also let you know. Thank you, everyone, for being here. Very, very, very grateful for everyone. Thank you. I appreciate it a lot. And I'll see everyone at the next one as well. Thank you.